As of today, Saturday, April 18th, 2026, the stock market is currently closed for the weekend. BigBear.ai, trading under the ticker symbol BBAI, finished its last active session on Friday, April 17th, with a closing price of $3.85. Throughout that final trading day of the week, we saw a fairly energetic intraday movement, with the stock climbing 2.67% from its previous levels. It was a day of recovery after some earlier turbulence, with the price swinging between a low of $3.83 and a high of $4.13. Seeing a stock touch that $4.13 mark before settling back down tells us there is a hungry pocket of buyers sitting just under the surface, but the overhead resistance is real. While a few cents might not seem like much for a high-flying tech name, for a company in this price bracket, these mid-single-digit swings are the lifeblood of active traders and represent millions of dollars in shifting market capitalization. The common expectation among retail investors right now is that BigBear.ai is just another speculative play in the data analytics space, a company that rode the initial hype of 2023 and 2024 but is now struggling to find its footing. People see the price sitting well below its 52-week high of $9.39 and assume the story is over. But here is the reality that most of the market is missing. While the stock price has been compressed, the internal mechanics of the company have been undergoing a massive overhaul. We aren't looking at the same debt-heavy, fragmented entity that went public via SPAC. The reality is that BigBear.ai has spent the last year aggressively cleaning its balance sheet, cutting down debt, and positioning itself as a primary beneficiary of the US government's urgent shift toward mission-critical AI. If you only look at the chart, you see a struggle. If you look at the balance sheet, you see a company that has quietly built a $462 million cash fortress. Recent stock movement has been dictated by a fascinating tug-of-war between institutional accumulation and retail fatigue. We've seen trading volumes spike during specific windows, particularly following the news of the company's leadership refresh. Bringing in heavy hitters for human resources and corporate affairs might sound like a nothing burger to a casual observer, but in the world of federal contracting, these are strategic moves to scale talent for massive multi-year government programs. Institutional activity has been picking up, with some of the larger players quietly adding to their positions even as the stock trades in this $3 to $4 range. This creates a floor that is much firmer than the volatile swings of 2025 might suggest. There is a clear tension here. The market narrative is focused on past dilution and losses, while the institutional reality is focused on the $385 million backlog and the potential for a massive short covering rally if the company hits its 2026 revenue guidance of $135 million to $165 million. The volume on Friday was particularly telling, with over 46 million shares changing hands. That is a significant amount of liquidity for a company of this size, suggesting that big hands are moving pieces on the board. We are seeing a shift away from the growth at any cost mindsets that dominated the sector previously. Now it's about execution. The market is waiting to see if BigBear.ai can actually convert those lumpy federal contracts into consistent high-margin revenue. When we look at online investing trends, BBAI often pops up as a high-risk, high-reward favorite, but the smart move is to ignore the to-the-moon chatter and focus on the sector momentum. Defense AI is no longer a luxury, it is a national security priority. This macro pressure is pushing more capital into specialized players, and that is exactly where this company sits. Let's talk about the business model for a second, because that's where the long-term value lives or dies. BigBear.ai isn't a consumer-facing chatbot company. They are in the trenches of data ingestion, predictive analytics, and edge computing. Their recent acquisitions, like Ask Sage and CargoSeer, have given them a foothold in very specific, very lucrative niches. CargoSeer, for instance, uses computer vision for border and customs protection. That is a recurring revenue stream that is much more stable than one-off consulting projects. They are essentially building a modular AI toolkit that can be plugged into existing government infrastructure. This is why investment help professionals often categorize this as a picks and shovels play for the modern defense era. They aren't building the whole tank, they are building the brain that tells the tank where to go. Before we move into the future outlook, I want to hear from you. Comment below how many shares of BigBear.ai you currently hold, or if you're waiting for a specific price target to jump in. Do you think the government's push for AI will actually benefit smaller players, or will the big three defense contractors eat everyone's lunch? Your perspective helps everyone get a better sense of the retail sentiment on the ground. Looking back at the older reports, it's easy to see why some people are hesitant. The 2025 net loss was substantial, and the capital raises did lead to significant dilution. The share count surged, which naturally invited short sellers to the party. At one point, short interest was hovering above 30%. However, this creates the perfect setup for a squeeze if the company delivers even a modest earnings beat in the coming months. The expectation was that the company would continue to bleed cash, but the reality of their 2026 guidance suggests a turn toward profitability is closer than many things. If you are using investing sites to track your portfolio, you've probably noticed the hold ratings are starting to lean more toward buy as the price targets from firms like Cantor Fitzgerald and H.C. Wainwright remain significantly higher than the current trading price.
For those of you looking at self-investing, it's important to weigh these catalysts against the risks. The primary risk here is the lumpy nature of government spending. Contracts can be delayed, funding can be shifted by Congress, and the procurement cycle is notoriously slow. Even if BigBear.ai has the best technology, they are at the mercy of the federal budget. This is why the intelligent portfolio approach usually suggests keeping a name like this as a smaller, speculative slice of a broader diversified strategy rather than a core holding. You have to be okay with the volatility. The 52-week low of $2.36 is a reminder that this stock can and will test your patience. When you look at the broader landscape of online investment, platforms like the Fidelity trading platform or the SoFi trading platform have made it incredibly easy for retail traders to jump into these volatile AI names. Whether you are using a Fidelity brokerage account or the Robinhood app, the accessibility of BBAI has contributed to its high-volume days. We see a lot of activity in Robinhood investments and Robinhood fractional shares, which tells us that a younger, more aggressive demographic is betting on this technology. Meanwhile, more seasoned investors using Interactive Brokers Trading or Fidelity Wealth Management might be looking at the company's debt-to-equity ratio and the cleaner capital structure as a sign of a maturing business. The future outlook for BigBear.ai is defined by its ability to scale. The upcoming special meeting of stockholders to increase the authorized common stock count is a double-edged sword. On one hand, it gives them the ammunition to make more acquisitions and fund their growth. On the other hand, it raises the specter of further dilution. How they use that new share authorization will be the ultimate test of management's credibility. If they use it to snap up more high-margin SaaS companies in the defense space, the market will likely reward them. If it's used just to keep the lights on, the stock will struggle to stay above that $4 resistance level. The expectation versus reality dynamic will continue to play out through the rest of 2026. The expectation is that small-cap AI is a bubble that has already popped. The reality is that the actual implementation of AI in government and industrial sectors is only just beginning. BigBear.ai has positioned itself at the intersection of those two worlds. They have the cash, they have the backlog, and they have the leadership. Now they just need the results. If they can hit the midpoint of their revenue guidance, the current price of $3.85 might look like a massive oversight by the market in hindsight. In summary, we started with a stock sitting at $3.85, up 2.67% on its last trading day. We moved past the surface-level fear of dilution to see a company with a nearly $500 million cash pile and a strategic focus on the U.S. defense surge. We contrasted the market skepticism with the institutional accumulation and the cleaning of the balance sheet. The reality of BigBear.ai is far more nuanced than a simple meme stock label would suggest. It is a company that has traded its volatility for a cleaner, more professional capital structure, aiming to become an indispensable partner to the federal government. Whether you are using SoFi active investing, Robinhood stock trading, or managing a Fidelity IRAs, the story of BBAI is one of transition. The gap between its current price and its narrative fair value represents either a massive risk or a significant opportunity, depending on your belief in their execution. We've seen the expectations, we've looked at the reality. Now, the market waits for the next move. Keep a close eye on the volume and the upcoming April 30th earnings report. That will be the next major test of this thesis. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell subscribe for more updates.